glad it's the weekend. I'm celebrating once again with some Johnny Walker Blue Label, baby, because it's beautiful, it's smooth, it's aged 20-plus years, baby. You understand what I'm saying? $300+ a bottle. And I'm a capitalist, and I'm living lavish. That's all I'm talking about. I mean, some of the investments that I bought and fed on a couple of weeks ago, even though we saw a little bit of a retraction based upon the Labor Department's releasing of the employment numbers that basically kicked the investment market in the teeth. We saw a retraction in equities, folks, if you happen to be in the equities markets. And the reason is, folks, is because the Labor Department released their little numbers on how many jobs were created in the United States in the month of June. And they were expecting 90,000. 90,000. And we only got, what was it? 19,000. It didn't even meet up to the economist expectations, for Christ's sake. It was just horrible. Even though the ADP numbers, which the ADP is the private accounting firm that controls the paycheck cutting of most of the small businesses across the United States and mid-sized businesses also, they saw an increase of job creation based upon the amount of payroll increases or the amount of increase of people on their ADP payrolls. So that's what caused the big spike yesterday, anticipating that the ADP private report that came out yesterday was going to reflect the Labor Department's numbers today, and it didn't. But anyway, folks, let me tell you something right now, folks. I wouldn't worry about this retraction. All right, earnings season kicks off next week. For all you folks that are unfamiliar with earnings season, that's when the public companies that are out here on these stock markets begin to release their quarter earnings report, and the quarterly earnings are not going to reflect the labor statistics that seem to bring such dismal negative news to the stock market today. But before we get into anything else, folks, I'd like for everybody to please retweet the broadcast. All right, go to the social networks, go to the forums, go to the blogs, spread it around like wildfire, because it's Baller Friday. We're in effect and in the house, and I think that everybody needs to be here. You need to be here. No matter where you're listening at on the internet, try to get into the chat room right now. We only have a 500-person limit. You can get here at, get this, blogtalkradio.com/ghost. G-H-O-S-T, for all you ass clowns that can't spell. All right? Come on down here. We want to check you out in the chat room. We want to hear from you. All right, 500-person limit. Let's get to the markets, for Christ's sake. And let's just get through this. It's Baller Friday. I want to take your calls. So let's get through this. Once again, we saw some negative numbers in the equities markets, and the reason we saw negative numbers is because of the Labor Department's releasing of the amount of jobs that were created in the month of June. Economists and all the street experts were expecting 90,000 jobs created, and there was only 19,000 jobs created. So that's basically what tanked the market. You had the investors, running with their chicken, with their heads with their heads chopped off, for Christ's sake. I mean, they're flustered. It makes me sick, the amount of ballless investors that are out here not knowing and understanding the fundamental of investing, for Christ's sake. I mean, you should have seen the futures, because I trade futures, folks. I wake up at about 5:30 in the morning. I trade futures. All right, the futures were on the plus side this morning for the Dow Jones Industrial, NASDAQ, and S&P, all right? Right when this Labor Department employment data came out, the thing tanked down to about negative 100 points in the futures market, for Christ's sake. So, I mean, once again, let's just wait till Monday. It's going to kick off earnings season. Let me tell you, if we start seeing good earnings come out in earnings season, these numbers aren't going to reflect anything. As a matter of fact, it should tell people that since people are leaving, it's good bottom-feeding opportunities out here. It's good bottom-feeding opportunities to capitalize. So anyway, let's get through the markets. Dow Jones Industrials is down 62.29 points today. It was down as low as 100-plus points but closed out down 62.29 points, a percentage decrease of 0.49%, closing out today at 12,657.20 points. S&P 500 closes down on the negative 9.42 points today, a percentage decrease of 0.70%, closing out today at 1,343.80 points. NASDAQ closes out today on the negative side also, 12.85 points on the negative, closes down on the percentage of 0.45%, closing out today at 2,859.81 points, for Christ's sake. Sorry if I'm stumbling over my own tongue like John Edwards trying to explain how he didn't know the law about funneling campaign funds to his disgusting rodent-looking of a mistress. But I'm trying to do like 80 things at once at this point in time. You know what I'm saying? You know how the engineer is. The engineer, no offense, engineer, but, I got to do a lot of things here. You know what I'm saying? No offense, engineer, right? Yeah, none taken. Anyway, it's Baller Friday. Let's get through the commodities. The commodities took a hit also, folks. I mean, not many of them, but the ones that took a hit were definitely in the petroleum. Let's start with Brent crude. For all you folks that don't know what Brent crude futures are, it's the oil that's shipped off into Europe and Asia. It was down today 32 cents, a percentage decrease of 0.27%, closing out today at $118.27 per barrel of Brent crude oil. Gasoline futures still shot up somewhat today. They were up $6.75, a percentage increase of 0.70%. Heating oil futures saw a modest sell-off. It was down 65 cents. Natural gas saw an increase today. I mean, remember, we saw a tank yesterday. It saw some bottom feeders come in today. It is up 8 cents, a percentage increase of 2.15% in natural gas. And WTI sweet crude, we were worried that we were going to see some $100 a barrel oil. I still think that we are. I think that this sell-off in WTI sweet crude is just a ballless investor reaction to what the numbers did to the equities markets today. But once again, it is down $2.18, a percentage decrease of 2.21%. Closing out WTI sweet crude today at $96.49 a barrel. $96.49 a barrel for all you idiots that didn't understand that. Anyway, let's get to agriculture's futures here. We got canola up $2. Coconut saw a major sell-off today. It is down $95, a percentage decrease of 2.98%. Coffee is also down $5.30, a percentage decrease of 1.97%. And corn, I mean, Jesus Christ, what the hell's going on with corn? All right? I mean, we're in the middle of this debt ceiling raising debate out here in Washington. The teabaggers and Republicans and the left-wingers are out here, they're debating on what should be cut, what shouldn't be cut, what initiatives should be put. I mean, it's just a bunch of bureaucratic political nonsense, and they're playing Russian roulette with the American and world economy with this crap, all right? But a part of the deal, according to all reports, ethanol subsidies, and for all you folks that aren't aware what ethanol subsidies are, they're actual tax dollars that go to corn producers so they can purposely produce corn to refine into ethanol so that they can provide a supposed alternative energy resource to gasoline, all right? I know it sounds ridiculous. It's been happening. Out here in Texas, we actually have corn ethanol gas pumps, believe it or not. I kid you not, we have that. And tax-paying dollars are being taken out of our pockets so that we could burn food. That's what we're doing here. That's why we see increases in corn. We're burning food, for Christ's sake. Why we're seeing an increase right now in corn futures, I have no ideas. The talk on Washington, D.C. is that they're going to end corn ethanol subsidies. They're going to end corn ethanol subsidies. So why are these idiots buying into the corn? I have no idea, but it's ridiculous. Corn is up All right, $21.50. That's a percentage increase of 3.49% on the day. That's ridiculous. Piece of chicken-eating cornboard crap. Cotton is up 36 cents, a percentage increase of 32%. We've got wheat futures up $3.25. We've got sugar down. Remember, we've been seeing dramatic increases in sugar. We finally saw somewhat of a decrease today. It is down 16 cents, a percentage decrease of 0.54%. Soybean futures are up $8.75. Lumber continues to see its bounce from yesterday. It is up today again at $7.60, a percentage increase of 2.90%. We've got oat futures up $4.50, a percentage increase of 1.28%. We've got soybean oil futures down 32 cents. And the bull-nosed bull dykes definitely took control of the goddamn wool futures today. Did everybody see wool? Did everybody see wool, for Christ's sake? It is up $12 today, a percentage increase of 0.82%, for Christ's sake. So we got the definite bull-nosed bull dykes taking control of that wool market. Let's go to the metals, shall we? We got a sell-off from the dramatic spike we saw yesterday in copper. Copper is down today, $4.05, a percentage decrease of 0.91%. We've got gold up. I mean, obviously you would think that if you see a decrease in equities, that you would at least see some kind of an increase in some commodity. And finally, we have the traditional method of investing finding itself in today's trading. Because today, we did see gold up today. Did everybody see gold today, for Christ's sake? I mean, it was a decent price. It was up $13.60, a percentage increase of 0.89%, closing gold out today at $1,544.20 per troy ounce of gold. You know what I'm saying? Per troy ounce of gold. I mean, this ain't no joke. Anyway, let me go ahead and get through the damn livestock futures, then I'm going to take your calls. Live cattle is down 10 cents today, pretty modest decrease. Same thing with cattle feeder. It is down 15 cents. And for all you assholes that like to shove a couple of ham bones down your gullet, lean hog futures are up modestly 2 cents. And that, my friends, is the markets for your ass. Woo! Anyway, folks, I'm excited. I know that we're seeing, somewhat decreases today in the market, but like I said, it was just a market reaction to the numbers that came out of the Labor Department. We saw what the numbers that came out of ADP, and you can look that up and Google it for yourself. It was very positive. It looked like more people were on the privatization payroll, and that's what fueled yesterday's rally. Well, today we've got a lot of people in here running scared because the Labor Department didn't meet up to the economists' expectations of 90,000 jobs produced in June. Instead, we only produced 19,000. So this is, definitely very precarious, and not to mention that, we've got this debate of the debt ceiling, going on out there in Washington. And let me go ahead and delve right into that, for Christ's sake, because Obama had a news conference. I mean, he had to, right? I mean, he had to have a news conference after these dismal employment numbers coming out of his Labor Department. So he got on the stage and was like, yeah, baby, you see what I'm saying? Let me break it down to you why stimulus package 2, baby, and why all my policies ain't brought no jobs up in this motherfucker. Let me tell you why. Because these motherfuckers over here, John Boner, the fools out there in the teabagger, they ain't playing ball with the debt ceiling, baby. You understand what I'm saying? They sitting over here trying to make the debt ceiling something and trying to take out of our pocket, baby. Trying to take power out of our pocket. We ain't like that, baby. And for all you folks that don't understand what that means, basically what he said was that the reason that there's uncertainty, there's uncertainty in the markets is because of the debt ceiling. And that's why we haven't had job growth. Can you believe this crap? He actually got on the air today. You know, he got on the air and said, look, the reason that we have stunting job growth is because of the uncertainty and the debate and the increase of the debt ceiling. And now, look, I'll give Obama this much credit. I think that the debt ceiling is weighing on the conscience of not just investors, but small businesses, big businesses alike. All right, I'll give him that. But at the same time, I think that it's this big government expansion, big government overregulation, potential overtaxation, for Christ's sake. I mean, Obamacare. I mean, can we go on and on? This is why we're not having private
Hello.
being created. You've got the government trying to stifle American jobs. On top of which, you've got a world economy comprised of individuals that, I hate to say this, they're a lot more qualified for highly technical trade-skilled labor than those that are walking the American continent at this point in time. I'm just saying. But once again, if you happen to be in the markets, I think that everything's going to be just fine. All right. I mean, I think that the earnings are going to reflect that it wasn't as bad as these idiots are anticipating. Because let me tell you what this labor jobs report says to me. All right. It says diddly squat. Because let's be honest, what is the basic fundamental key of middle class and lower middle class economy? It's entitlements. You understand? It's entitlements. So even though we're not producing the so-called growth jobs out here, these people are still collecting their government cheese. These people are still collecting their food cards. They're still collecting their housing voucher programs. They're still collecting all these government entitlements, and they're out there spending it. They weren't spending it in February, March, April, because, hey, I mean, the bottom line is that we saw a spike in energy costs. We saw a definite spike in commodities costs. You can look on the charts on both of those and see what I'm talking about. And this is why you saw a retraction. It's summertime now, baby. You think that the middle class and the Po in America are going to, just sit back and not do anything for the summer? You think they're just going to have a Coke and a smile and, throw a jersey to Mean Joe Green? No, they're not going to be able to do it. You know what they're going to do? They're going to go out. They're going to save their money. They're going to take trips.